Can you go through some 10 a.m. open high low close setups from last week? Yes. Let's see if I can find something decent. I specifically chose to leave this week out because it wasn't the nicest, but here's a decent one. What do I want to mark? Let's mark 10 a.m. here. Let's mark 9:50. Let's mark 10:10, which should be around there. So, what was this? Thursday? Thursday, we had this expansion higher off the open into what was the equal highs from the previous day. And then we traded down lower and we SMT'd these lows right here. This was within the SMT with ES low. This was within the macro timings, right? From 9:50 to 10:10, where we'd expect that sort of stop hunt. And then you've got your 10 a.m. opening price right around there. Now, the tricky thing with this setup is that initially it may have caught you off guard because it trades lower here and then trades up and forms this beautiful order block after repricing the volume imbalance down here. But what you're looking for is the buy stops above this high to get ran. And now we've essentially, from this opening price to here, we've printed the wick on that 4-hour candle. So we want to look for market to trade back below it to frame a sell setup. And so even before we trade back below that opening price, I'll draw it out in time like this. You can see right here.
Yeah. Shall I go in now?
Who is that? Is that the guy? Ah, no. Oh, that was you. My God. I didn't hear a word you said. So this is the 10 a.m. opening price. And let's get bottom right here. We took out sell stops below the lows. We had an SMT. We trade up higher, run out buy stops above here. This right here becomes a balanced price range. Now, if this here is a balanced price range, because we've got those, please mute your mics, guys. Let me just do this and do this. It's this guy. There we go. Okay. So after this balanced price range is created, what happens is that there's traders that are trapped up here buying a breakout long above these highs, right? They see this high and they expect that if we break out above this high, the market's going to trend higher. So as soon as that happens and we break out above it, we trade lower again. And this BPR is what creates that balanced range, which essentially means the market's delivered buy side and it's delivered sell side efficiently. So there's no need for the market to trade above this high again. If it were to trade above this high again, it would allow the people who had entered on a breakout to offset their position or to mitigate their loss. So then you get that nice little institutional order flow entry drill right there. Trades just into it but doesn't fill it. Breaks down lower. And then it trades up into here, uses this range a little bit. If you check out, where is it? This little inversion here. We trade into the inversion, we respect it, and then we trade lower off of a consolidation. So the market is in a small range right here, right? It's not really being too decisive. Takes out the lows, runs for the highs, then breaks down lower. Because we came from a consolidation, you can expect that this gap is going to either be an institutional order flow entry drill, see that, just one tick, or it's going to stay open completely. And then eventually it breaks down lower into the sell side resting below here, and inevitably the sell side resting below there, I believe. See, did that come close? Take it.
I have a question, sir. Sorry to interrupt.
Sure, no problems.
When the SMT is formed and we start to run to the upside, we see a pull down a little bit and then another run to the upside. So we can say that this is a failure to swing low. I'm talking about this and making this question because the decision making need to be on point in those for traders. So when we see that run to the upside, making a change in the start delivery to the upside after the SMT being formed, we can actually take a target as a high. And then I see the same thing in the swing when we rate to the highs. Then I see the same in that swing high, that when we just push a little bit to the upside and then we run down, failing to swing high. So
Yeah.
when it comes to decision making, can we say that this is just like a change in the style delivery to the downside also, and we can take actions over there? Thank you.
So I understand where you're coming from, and I think what you're saying is that when we break structure to the upside, we could consider this a change in state of delivery higher, and so there may be reasoning to trade higher. Is that what you're saying?
No, no, no. What I'm saying is that you see the S&T being formed,
We've
and
got the
then the
S&P.
market, yeah, and then the market run to the upside, make a
Yeah,
pullback, make a little pullback, and then
yeah,
run. So
yeah.
that closer above these two bearish candles in the second,
Yes,
yeah, there.
that is a
So is
CSD.
that, yeah, that's what I'm
Yes.
trying. And I see the same in the swing high.
On this high, or you mean on this run down here?
No, no, no. When we already rate high,
Mm-hmm.
then we have a little bit pullback, and then we
Yeah,
run down, creating an internal change in the style delivery.
yeah.
Um,
It's totally valid. You can use that.
yeah, okay, great.
Yeah, I'll tell you why. Because because ES took out these lows, this candle would essentially become the change in state of delivery on ES because it's that last candle. But when you're looking at the market structure like this, where you see this, and then a higher low, this means that Nasdaq is stronger. But this also means Nasdaq never took out this low. So if it didn't take out this low, how can we trust this candle to be an order block? On the retest of it and repeated closure above, essentially the down move, you can use this candle as your order block or your change in state of delivery. So this is a completely valid entry, and this is an entry I would take myself as well. Let's see,
Thank
right
you.
there.
Thank you so much. Because I see this, I already know this, but I want you to explain it because you are the master here explaining the. But
No
then
master.
traders sometimes traders see this and they doubt in the decision making to get involved in the movement.
Yeah,
And I want them to know that this is just an internal change in style delivery that will actually cause the rate of the previous high.
yeah.
That actually is the discussion. Yeah.
It's essentially proving to you the trend continuation, which means it's
Yeah.
totally valid to have, you know? I mean, if you think about what happened here, we traded lower, old imbalance, closed above this, we've got an imbalance right next to it, and we've got that volume imbalance down here. It respects it perfectly. I can show another example of this, perhaps. And if I were to pick between, let's say, a CSD like this candle where we take out the highs and then we sell this candle versus this candle where we don't take out the low, I would always take this one because what you're betting on is a continuation, and I can show that perhaps in today's price action right here. Look at this. You see the drive lower? This candle is your change in the state of delivery. I'm using this set because 1, 2, 3, 4, 5. This should equate to one 5-minute candle. Let's see if I am correcto. Yeah. So that's that one 5-minute change in state of delivery.
Yeah.
But now what happens is that if you want to be safe about it and you want to make your entries more precise, you're waiting for that to happen. And then you see these down candles that retrace into it. You can take that as an entry as well. And this is like a really nice.
Yeah.
It's an internal one essentially, right? After this one's happened, you've got another one occurring here. Then of course, right there again, we get a retrace into absolute tiny gap. And then this candle, once closed above, you can use that as well.
I think that you're froze
I froze?
a little bit. Yeah.
Oh, okay. My bad. So what I was saying is that if it's this much of a tail, you can use the wick like that and buy 0.5 of the wick. So
Thank you
these are
so
like,
much for your answer.
yeah. And they're higher
Um,
probability because we've created this change in state of delivery and then respected it. So much rather than buying this and it fails, you wait for this to form, you wait for this to respect it, and then you buy that.
100%. And another question personal that I have for me,
Hmm.
because I never traded SMT before,
Yeah.
and it's a new term for me. So,
Yeah.
and I only trade gold. I don't trade,
Mhm.
but I'm moving now to indices. So when I'm seeing an SMT, in my case, from gold and silver, and which one should I follow? Because I know gold is the stronger, the stronger pair. So when I see an SMT, one take the low, the other one don't take the low. Which one should I follow?
We always advise, let's say, to take the one that does this here, the one that's stronger at the moment, because the willingness to make a new, oops, wrong tool. The willingness to make a new low, like let's say this is ES and this is NQ. On varying days, one of them is stronger, the other one of them is stronger. There's no like specific which one is stronger. Nasdaq will move much faster, and I would generally prefer Nasdaq to ES any given day of the week. But the asset that fails to make the lower low is the one we want to trade. Because if you're looking at this pattern right here, and you've got buy side resting, let's say above here on both assets, the fact that ES made a lower low here and Nasdaq made a higher low means that ES would trade up like this and then fail to take out the buy side, whereas Nasdaq is much more likely to really run the buy side and then trade lower. So the target that makes the SMT in relative strength is also more likely to reach the target that you're aiming for. So you don't want to be trading the weaker asset and falling short. Always take the one that has the stronger structure. And it goes inverted as well for sells, right? If I'm bearish and ES makes a new high, but Nasdaq makes a lower high, then I want to be trading Nasdaq because it's just going to be much more heavy on the downside. Sounds good? Cool. Hello.
Yes, sir. Sorry, just my baby woke up.
No worries. Someone said hello. I don't think that was your baby, right?
Yeah, I don't also trade SMTs, but now I think I'm getting interested. But the thing is that if I'm looking for a buy on Nasdaq and then
Go on. You there, homie?
for me,
I think he died. Brother, you want to try use the chat? See if you can message here in case it's not working. Because your voice just cut out. I can't really hear you. What's happening here? In the okay, our brother just exploded. Higher high SMT isn't low resistance. It is low resistance, but what makes it not low resistance? If I see this on ES and I see this on NQ, I'm not gonna short this because this is failure swings. But if Nasdaq does this, that's an SMT. So what does this tell me? It tells me that smart money is offsetting their position above this high. And this is the order block that they're creating. So this order block would create a change in the state of delivery, which means that the market is changing gears internally from a sell program into a buy program. Likewise, if you look at this here, let's see. It's unlikely we got SMT here, but if I just look at this 1 minute candle at 8:30, this is your change in state of delivery. Buy side liquidity above Asia highs, it must have been. There we go. So Asia highs right there. We purge the buy side. We trade below the last up closed candle that took out buy side, respect it, trade lower. Now we're in a sell program. What is a sell program? Sell program means the market's gonna continually offer sell side until we reverse. So regardless of what you think might happen, it's just gonna keep pushing lower, 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 lower. When do we change gears? When does the market flip the switch and go the other way? Right here. What happens here is that we change from a sell program into a buy program. That's why they call it a change in state of delivery, because we're changing from sell side delivery into buy side delivery. So now all of this liquidity is offset to be attacked. And now if you look from here to there, that's also low resistance. But it doesn't matter because we've had this change in state of delivery and the market is bound to reprice higher. And then what happens up here? Same story. Keep POI, there's your change in state of delivery. Making all that audio, man. Da Vinci, man, you're tweaking. Larso too. Guys can't join stream. Why? What is the logic behind using that wick and marking? Oh, I'll show you. If you go to the daily, you can essentially you can transpose price action onto your lower time frame charts. If you look at intermediate time frames, like okay, let me see if I can do it on the 15-minute, just for the sake of showing it. Get rid of you. Okay, so like for instance, this here, I see that this wick was delivered to the downside, and I see that this wick was delivered to the upside. So this is the 15-minute chart, but if I look at an hourly, probably going to be a fair value gap there or on a higher time frame. Okay, so a bit off, but you can see how that wick from the 15-minute chart defines the low end there. And then if we go to the daily and we do the exact same thing, una momenta, this right here and this right there, which is just that daily gap. When you go to the lower time frame, it would be defined by the low end right here and the high end up here. Why? Because the market delivered price action all the way here, right? This has all been balanced. Then we had displacement through, and we traded up into here. Preferably, I would even use this here, right there, that little low, and that might give you a more accurate feed. So I'm using the higher time frame gap on the by looking at this and that essentially. Or you could just mark up the higher time frame gap. You could just make it easier. Wait, the stream is full? That works? No way. Ah, you just spam, it'll take. A Zoom link? Yeah, we'll think about that for maybe next time, but for now I think we'll have to keep it like this. Yes, the stream is being recorded. Let me just type that in case this guy's not getting it. Damn, that fucking sucks. This place is just too crowded or what? Yeah, it's all recorded. Will CSD always have an impulsive move? No, but it's preferable to have it because let's see, get on the one. So when ICT talks about displacement, he's essentially saying that big orders are coming into the market, right? So when you look at all of this price action, this is not displacement. This is just, moving up, moving down. There's a gap there, but it's not really relevant. It's very insignificant price movement. But order blocks, which are to be defined as institutional buying and selling, once they're created and you get this massive move up, this is what's referred to as displacement, right? So this shows you the psychology behind it is that it shows you they're in a rush to move this market higher, and they've taken in liquidity down here because of this aggressive reaction to the upside. And so it's an added confluence if you want it to be that. If we look up here, for instance, we get some displacement, but we spend a lot of time around this area. This is still an order block. And this is like you get your gap there, you get another one right below it. It spends some time there, but then you get an equal reaction ripping to the downside. So it doesn't need to have it, but it's an extra confluence because the market's displacing, it's looking to move the opposite way, it's disrespecting PD arrays on this side of the range, so you can look to go for longs. Mhm. 1 second, the chat thingy is loading. Actually, I'll just check here. Will that be considered as a unicorn? That is a unicorn. I would take this, but we'll just use this for the sake of it. That's your breaker. And then there's your unicorn. And a beautiful one at that as well. Swing low, swing high, lower low, higher high, and then the gap. Okay, I'm trying to figure out how to fix this link thingy now. This stream thing. Because it's kind of fucked up. I mean, if we look at how many, I think 100 something people voted, so going into stage screen share. I'm not sure if I have the perms for it. Should I try? Okay, check this out. I will try stage screen. Let's see if this works. All right, let's see. Let me share the screen again. Like so. That works. Up in stage. Should work. Yeah. So we're using the stage chat now, it seems. Can you guys just confirm is the chat, is my voice working? Yes? Nice, 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 nice. So let me check, because there was messages in here. Can we talk about weekly profiles? Sure. Where are you gonna upload the video? I'll see with the T if there's anything where he'd want to upload it, but I think most logically is I'll just upload it to my YouTube, and I'll put it as an unlisted video and then share the link with you guys. So if you ever feel like you need to watch it, you can watch it there. What else was there? Someone asked about CSD entry. CSD entry, explain. So change of state delivery entry is honestly really simple. You're looking for a run on liquidity. Let me eyeball you. You should be somewhere over here. There we go. This to there. So you're looking for a run on liquidity. And then after that run on liquidity, you're looking for the market to trade up above the down closed candle that formed into that pool of liquidity. And then that would be your order block, right? And an order block is a change in the state delivery. They are in and of itself the same thing. We have the same thing sort of happening up here. We trade into that 4-hour BPR. It may have topped somewhere like that. And then this set of up close candles, you're taking the opening price. Once we close below it, you're looking to sell short. Let's pull up this thing. Looking to sell short at opening price. Put the stop above the order block high. Maybe look for 2R, something like that. That would be your change in state of delivery entry. In my opinion, best entry in the world. Super easy, super reliable, and you have to wait for the right things to happen to trust it. So it generally sets you up in a good spot. Weekly profiles. Now it's a vague topic, but you can if you have any specific questions, then I can go into it. But like just weekly profiles, we're 30 minutes in and we haven't done much yet, so that might take a while, you know? No problem, brother. How do we know when we can maximize risk reward on a trade? Okay, if you're starting, I advise you don't try at all. Don't try to maximize your risk to reward or minimize your risk, especially because I'll tell you what happens. When you're looking to take a trade, some people do something like this. Let's say you're taking this sell here. If you're selling this and if your stop loss is above this candle's high, and you're looking at, let's say this here, this is 3.5R. So people will be happy with, is there two tools? Never mind. People would be happy with this 3.5R pull essentially. But what most people really do is they want to get 3.5R, so they make their stop like extremely tight, you know? Whereas if you did this, your stop is extremely safe, but you're actually getting more range out of your trade. So this makes you more money despite being 2R versus being aggressive with the stop and looking for a longer pull. if you want to maximize risk to reward ratio, as in like when you've gotten sort of the hang of things and you're more confident in your trades and you can actively manage your position live trading, just study the PD array matrix, right? Like you want to understand old high, that's your highest PD array. Then you've got the rejection block. Then you've got a fair value gap, that's number 3. Then you've got your order block. Then you've got mitigation, which would be this low right here as an entry. And then you've got this breaker, I believe. Or maybe breaker and mitigation are swapped. So this is the earliest entry you can get, second, third, fourth, fifth, sixth. And if you do everything right, let's say I shorted this and I put my stop on this high and I'm looking for the sell side below there, you can actively manage your position by scaling your stop towards the next PD array on the hierarchy of the PD array matrix, right? So if we break down below this mitigation, I might feel comfortable trailing my stop just above this fair value gap. If we create a breaker, as we did here, I may be comfortable trailing my stop above maybe mean threshold of this order block. Or this mitigation right here, I'd maybe take the high of that mitigation as my stop. So that way you can sort of carry your position with you as it trades lower, because you understand that price is supported down by these PD arrays. And if you follow the trend, you can bring it, and build into your position and protect it at the same time. What I'd be more focused on is look for great trades where your risk is what it needs to be. Like for instance, this trade, just to data highs, this is a monster, right? 3.43R, I consider this to be a monster trade because you're pulling 107 handles within minutes, you know? But if you wanted to be really greedy about your risk or greedy about your entry, you may end up not getting filled. You may end up getting stopped out and then it goes off without you. I think just stick with clear PD array, clear stop management, and clear target, and let it do its thing. Favorite pair to trade, NASDAQ. 1,000,000% NASDAQ. Gold view. I don't trade gold, neither do I trade Forex or any of the other markets, so I wouldn't be doing outlooks on them. I could do an outlook generally, like let's say price action wise, but I don't know enough about the market to maybe be confident in what's likely to happen, let's say. See a lot of traders trying to execute OT in lower time frame, failing to get tagged for getting the high time frame deal range. And I think if you can go over it, it will be helpful for them. Okay, I'll say it right off the bat as well. I don't use optimal trade entry. I don't use OTE. The only tool I care about is not this one. It's this right here. The second the market is just below that 0.5, I'm taking it. And so another thing you can do is, this is our dealing range. Because this is the last high to low that took out prior highs and took out prior lows. So as I'm trading this day, I'd like to be long in a discount here, right? If I wait for this dealing range here to form, and then I try to compart myself into that again, I may never get filled. So I'm waiting for a discount on this tiny leg in the 1 minute chart, which is defined by new lows made here, new highs made above here. And I don't get filled, not understanding that on the higher time frames, this is a discount. It's a deep discount. Because actually, if I take this leg, I have to apologize 1 second. Got something in my throat. There we go. So if I take this leg and I split it again, on the higher time frame dealing range, this is in a deep discount, right? Of half of that leg. It's in the lower quarter. So regardless, I want to be a buyer here. But if you try and get too fancy with the swings on your lower time frames, you're going to end up missing a lot of trades. If you ever do this, always take the PD array that's near the middle. I'm not saying it has to be in discount. I'm not saying it should be fully in premium. I'm saying the one closest to the middle is the PD array you're always going to want to take. Probably see if I can find another example of that. So this was rebalanced. Okay, let's take this for instance. You see how this fair value gap is in premium and we never trade back into it? So you're trying to be greedy looking for that premium fill, whereas this one is perfectly in the middle. You always want to be taking this gap over the one in premium because you'd much rather get a fill and you sacrifice a bit of your, let's say, risk size because you have to put your stop a bit further away and account for the deeper entry, than not get filled at all and miss out on the entire move, essentially. Makes sense? Close to the 38th level or 50% works every time. 50% is the best place to be looking for. Do you scale in more into position when it's going your way? Yes, I do it a lot. Actually, scaling in is probably the best thing you can do. I'll always see how early I can get involved, but as the market's going in my direction, I'll actively add to the position and scale in. Because what you're doing by scaling in is you're creating massive downside potential, whereas the risk is really minimized, right? If you keep adding from here to there, and your risk is quite tight because you're near the top, you can manage that loss, but as soon as it starts breaking down, you're drowning in strong gains. So I would advise for learning how to add to your positions, but I'd be careful with it as a beginner, let's say. Because more often than not, what's going to happen is that you're going to buy at a bad position and it'll sort of mess up your risk reward. Like, okay, for instance, if I enter here with one contract and then I enter here with another contract, the middle between these two is where my entry is now, right? So from, let's say from this here, this trade right here into that high, I am now actually in here as if I'd entered there, right? Because I added another contract and it's going to put me at the middle. So now my trade is a 1 to 1.66 R. And then if I add another one, like right up here, it may just end up screwing it completely to the point where my risk is way too over leveraged for my target. And if I trail my stop, I may get stopped out for nothing because I'm trying to trail my stop into price action that can still be retraced into and traded away from. So for beginners, I don't advise for it. Pick a risk amount you're willing to lose. Decide like, okay, my drawdown is this much, I'm willing to risk this much. Find out where your stop needs to go. So let's say your stop must go here. Make sure that your risk is pegged to that stop. Don't put on more risk. Don't try risk less and be greedy and put it somewhere else. Just put it there and let the trade go to its target. More often than not, you'll get better results this way. How do you manage your risk by scaling in? The bulk of the position has to come in. Sorry. The bulk of the position has to come in early, and I need to be taking partials as it trades up, right? So if I'm getting in here, and then I get in again above this high, I'd look to scale out at 8:30 opening price, let's say, which is right there. So, or maybe at midnight opening price, which is somewhere here along the lines. So as I'm buying, I'm actively selling into the up close candles because that covers my cost and it protects my position. And whatever runs gets to do its job and run, right? That's the move that I'm happy to be involved for. But by actively buying into the market and taking profits at logical points in time where you would take profit, you're protecting your position and building in equity. Fuck, man. Wait, let me grab some more water. My throat is absolutely screwed. Best prop firm? I'll say Top Step. I'll definitely say Top Step. I think that's the number one firm to go with if you're trading futures. Expectations for next week. It's conflicting, but we have non-farm payroll, which means conflicting is good. What did we have this week? Where is my chart? There we go. This week we had weekly internal that we traded back into. Must have been from here to there. That should be the weekly gap, more or less. Let's see. Spot on. How's that? Anyways, we traded into weekly internal. Started that 4-hour market maker buy model. Here's first stage. We get intermediate term low created right there with that stop hunt. And now the target is all-time high to complete this market maker buy model. The only issue that we had this week is that we didn't make the run into all-time high, right? We sort of just bounced off of this. So let's say the instinct in me tells me we may be looking for more downside. If you want to see a case study on this, it must have been there. It's right there. 4-hour market maker buy model, trades higher, rejects here at this 4-hour order block, and then trades lower into the next week, taking out these lows. So I'm looking at this, and I'm also looking at this exact bit of price action. I think it's considerable that we may look for the sell side here. At the same time, my higher time frame bias is up. I don't want to fade it. And ES looks like this, which isn't really convincing of anything. If you think about it, that should be taken quite early as well. But with NFP coming up, what I could see manifesting is that we maybe do trade a little bit lower early in the week and then set up a range to go higher. I'm not trying to predict the week ahead of time, by the way. That's not how we operate because because we're going to need more intel, but this is something I could see coming out of a non-farm payroll week. And I don't know, for everyone who's been keeping up, I guess, with the weekly reviews, we outlined every single day from Monday through daily reviews through Friday, bias and narrative and all of the above, just by focusing on price cycles and weekly profiles. You don't want to like just predict price naked by looking at it here. Like for instance, okay, there's a sell side imbalance here on the 4-hour. We traded into it 1, 2, 3, 4 times. So saying internal range to external range is not going to help you if every single time we trade into it, we're just moving back in, and it's not really rejecting. Imagine now we just fold here and we rip higher. What you want to be doing is you want to be finding your PD arrays like this, and you want to frame the weekly profile around them. So let's say Tuesday low of the week. This week was not a Tuesday low of the week, but Tuesday happened to be the low of the week. If it's Tuesday low of the week, we'd expect Wednesday higher, Thursday higher, Friday higher. So that way you can sort of understand if my POI is above and the weekly profile says this, chances are we're going to trade there. And then you can see, okay, where's today's daily candle going to go? Daily profile will tell you that, how you can get involved, where you'd find entries, this and that. How you establish your bias and how do you merge it with the weekly profile? I'll cover that right away. Let me just see. Yes, it's all going to be recorded. Don't worry about it. Just throwing, been watching 2022 model, but I feel my knowledge needs to expand. Is there anyone this is good I can find more information on the model you guys are talking about? Do we have any MMXM resources? We just have the chat, but the chat is really just people flexing and Garrett backtesting. You're gonna have to watch some. There's a course you can watch, the MMXM Traders course for starters. But other than that, you're probably gonna have to do a lot of self-study. I think the majority of MMXM is seeing it in your charts and annotating it and doing all that stuff. CRT, waste of time. I don't know why US 100 reversed at 9:30 when there was clear TGIF set up for downwards round liquidity. Let's see. Let's have a look at YM. Mind you, I despise this asset with all my life. I don't care what YM does. It's a demon and I don't care. This was this week's price action on YM. Ugh. Let's look at the 15-minute. TGIF. Wait a minute. Where are you? Let's get this here. This was our low of the week. This is not a TGIF week though, because we didn't have one-sided expansion the entire week. Monday made high of the week, but that was about it. I wouldn't consider this a TGIF setup. But even if this consolidation profile that you can see here, let's get rid of some of the makeup. You'd expect the market to, like as you see here, it's taking out these lows, taking out highs, lows. You'd expect a Judas above the buy side here before it would be looking to trade lower into this sell side liquidity down there. My advice to you, don't trade this asset. Just ignore it. Honestly, don't trade it. Just trade, go onto your charts and look for NAS 100. NAS 100 or oh wait, you were talking about NAS. Or am I crazy? He was talking about NAS. Yeah, but it's still not a TGIF setup because it's not a classic expansion week. So I guess I still answered the question. Do I prefer the 1 minute versus the 5 minute? Yes, 1,000,000%. 100,000,000%. How do you establish your bias and how do you merge it with the weekly profile? Okay. For me, there's 3 components to bias. We start with closure versus sweep, right? So if I see, let's say right here, we close above previous week's high, I'm looking for next week to trade higher. Close above, technically you'd look for next week to trade higher, fails to do so this time, right? But what I use for bias is I'm looking at the weekly and looking at the next day model to expect, okay, is the next weekly candle likely to trade higher? Like for instance, this week, closed above this week's high, likely to trade higher. Then from there on out, I'm going into the daily and doing the exact same thing. Right here. Thursday took out these highs. Friday should trade lower. Friday failed to take out the lows, close below the lows, but Friday consolidated. So expansion or accumulation, manipulation above the highs, distribution, consolidation, redistribution. It's what I had outlined with the Monday bias, right? That they'd likely see the drive lower into the equal lows based on the price movement here. So then once we've formed that Monday range, now I'm watching. Do we get SMT on Monday lows? SMT, yes. Failure to close, higher. So now Tuesday is the low of the week. Monday was a large range. So now I can start throwing ideas around, right? If Tuesday is the low of the week, I would know that latest by Wednesday. So Tuesday low of the week, Monday traded lower means weekly profile, Tuesday low of the week, we'd have Wednesday, Thursday, Friday trading higher. Now I can look into the hourly. Now when I'm looking at the hourly, we have SMT at these lows. We've got equal highs. Where are they? Pretty much these, I guess, is equal. And there's these equal highs right here from Monday, right? And then we have an hourly change in the state of delivery. So once that hourly change in state of delivery happens, the weekly profile is starting to manifest. Now I'm only looking for longs. Tuesday, Wednesday, Thursday, Friday, all I'm trying to catch is longs. On to where? What's our higher time frame POI? Likely this here or the daily wick consequent encroachment. That would be what you're looking for. My POI was the rejection block. So I'm looking for us to trade into this and reject lower. So then your bias is higher. You know where the market is likely to top. You go back to the hourly. You start taking trades only in the direction framed by this POI. Once we hit it, you can start to frame the other way. But until then, you just keep riding the trend. There's other weeks where it's, let's see if I can find a nice clean. weekly reversal. I'll find one. Watch this. Where are you? You are there. There we go. So if you look at this, for instance, Monday right here, smooth highs, trades lower. Tuesday expands lower. Wednesday consolidates. Thursday makes the run higher. So we've got Wednesday making the low of the week. We've got a nice little volume imbalance right there. Non-farm payroll on Friday. Non-farm payroll trades lower into the volume imbalance. I'm looking for buys because the weekly objective is up here. What did we reverse from down here? If I go to the daily, we may find that there is a nice little higher time frame gap there. Right there, see this gap? And if I draw out the consequent encroachment, respected well, trades higher. So what you're actually doing is you're looking at the price action around you. You're identifying where are we likely to reverse from, where's the market likely to go to. You confirm the next day by using the next day model, and then use the weekly profile to establish how the weekly range is going to develop. And then you use the daily profiles to establish how the daily range is going to develop. I'm back to M1. That's all I do. I was anticipating for the daily fair value gap to be drawn liquidity earlier in the week, especially since price closed back in the range. Why was this invalidated and why were we looking lower earlier in the week? I was looking earlier straight off Monday because if I go to the hourly, look at this bit of price action. Accumulates here. This is a Thursday reversal, right? Thursday manipulates above the highs and then sells off. So consolidation, expansion, reversal. Now consolidation again. We cannot reverse from here higher, right? If the market's in a consolidation, it's going to have to continue or continuation to then reverse. So we get a continuation on the downside into our weekly objective by Monday, let's say. And I'm sorry for this. It's just that I have that magnet tool on. And then we get SMT on the lows. So this becomes the reversal up to here. Let's draw that out. So that's the reversal. Retracement right here, which engineers buy side liquidity above these highs. And then from retracement, we can see another reversal. So we trade higher again. So you're essentially looking at the market through price cycles, engineering low resistance liquidity and running it out again, and your weekly profile. And you pair these with the news drivers to get more accurate with it, essentially. So Monday, I was never looking for higher prices because Monday I knew we had come off of an expansion Thursday after manipulating these highs and accumulated Friday, which means that Monday has to continue lower to then reverse. It couldn't just wham up. Isn't it TGIF, brother? No, it's not TGIF. Because we didn't have one-sided expansion Monday through Friday. TGIF has one-sided movement. And we need to hit a weekly or higher objective. If you can do H1, then 15 is biased, then trade 5 minutes. You can do 15, then 5 is biased, then 1 minute trade. Yeah, it's all fractal at the end of the day. You can just do your sauce. No way. We got a 1 week timeout. Denny. I sent chart, I'll CRCT myself. Do you have a favorite setup, Kiko? Yeah, probably actually. Yeah. Just want to say I'm grateful for your breakdowns. It's very helpful. Appreciated. For those who are like just coming in or a bit later in, catching up, we're doing a Q&A or a weekly review. So if you have any questions to ask, you can feel free to just throw them in here. Can you explain the setup? Udron thinks he's funny. Wagwan, brother. Turtle soup. Turtle soup. You want me to cover turtle soups? It's nothing too complicated. See, we had one right here. What was it? Hiya, papaya. This was also a soup now that I think about it on ES. We had two that day. What the hell? That looked horrible. Let's see ES because it looked a little nicer. Right there, south side below that. This looks interesting. What's the difference between this close and this one's open? Okay, it doesn't tap it there. So turtle soup is essentially you're buying false or you're going against false breakouts. So when you see this range here, there's sell side liquidity below this low. As the market comes down to purge it, you want to be buying into this and you want to be using SMT to confirm that this is a false breakout. Because as the market breaks below this low, people think that we're breaking this level and trading lower, and you want to be going long here and trading higher into the highs. There was also an SMT up here, right? If you want to trade a turtle soup here, you've got these equal highs. You wait for a sweep, you confirm the SMT, and then you enter short at market. You may get filled something like that. You can target these lows if you like. And usually I wait for a swing high to form, and then the stop goes on this candle's high. So the risk to reward yield is massive on this sort of model. And that's all that this is essentially. You're waiting for false breakouts to occur, and then you're buying into them or shorting into them as they happen. And there's a lot of it which is also continuation turtle soups, where let's say the market is trading up like this, and then you get a stop hunt, like intermediate term, right? Let's say this is second leg of the market maker model. You get a stop hunt intermediate term. That's also a nice soup entry you can take. You want to confirm it with SMT, obviously. And then you're essentially buying below this old low and taking the trend higher. It's very easy in textbook. It's very difficult in when you have to apply it, I suppose. At least that's been my experience. Confused on why I didn't go for London right there. Matty, maybe like another hour or so, I think. How to get entry turtle soup? Market entry. I would just do it on market. Just buy the market, and after you see the SMT, you buy the market, and you have to know that you're likely to be onside, because if you're not, it's gonna punish you bad quick. Could you go over more examples of your narrative, forming the narrative, and then refining your entries? Yes. Let's look at Tuesday. This is how we form narrative. So we've got, what week is this? Monday? Okay, we've got equal highs up here, buy side liquidity, right? We trade into our weekly fair value gap. I'm just gonna assume it's something like this. So we're moving from internal range, we'd like to move back out to external. After we've traded into our weekly fair value gap, do we get a stop hunt? Do we get offset distribution essentially? Right there, previous day's low, we hunt it. When do we take it out? During London. So now, what have we got? We've got Asia accumulating, London manipulates, and then we have a run on the upside with the change in the state of delivery on the 1 hour. Seeing this pattern tells me immediately two things. First thing, this London low is protected. It's protected because it took out this prior low with an SMT, and we've had an hourly change in state of delivery, so we're likely to trade higher. Leaves me with one profile, which is a classic buy day, right? So classic buy day. How do we trade a classic buy day? On a classic buy day, you'll see, let me pull up my templates real quick. Where is that stupid chat? There you go. Is it there? No. Where's the buy day profile thingy? Here. So on a buy day, what do we have? Asia low, previous day low rated. London creates high resistance, trades higher. And then we're looking for SMT on lows during New York to frame a continuation. 930 should trade lower. So now we go into here, right? Let's hop into the 5-minute chart. Let's see if we can find an entry. Now I've established the profile is likely to be a buy day. So now I'm looking for SMT, right? If I pull up ES right below me, you see that right there? This should be 930. So this is 930 opening. We trade lower. Both assets do it. And then ES makes a new low right there, whereas Nasdaq makes a higher high. So that's my hint that they've manipulated the stops below here, and they're looking to take the market higher. So now I can look to frame an entry. If you look right here, we've got a 5-minute fair value gap. You can look for the consequent encroachment, like so. Maybe place a long position there. Stop below the first candle low. Target 2 hour, let's say. And that's your trade. And you're following along with the direction of the daily profile. You can do the exact same thing with a, let's see if we had a decent New York reversal. No, not really. This here. Yeah, sort of. No, not really. Okay, like this here, for instance. Right here again. You've got smooth edges up here. This is London, trades lower. We trade down here, sweep out these lows. And if you're bullish, you want to see this happen. Then you want to see, do we break structure to the upside? Yes. So now, in New York session, you're looking for what? SMT on lows, continuation buys. If I pull up ES, right there and right there, that's our SMT. So after that, you know the market's likely to trade higher. If you've got the guts, you take the soup entry. If not, there's a nice little fair value gap. Assuming you were to take this, your risk reward would probably suck. It might not be a trade that you would take. You might have to frame lower for this time frame. But you're using the daily profile, which is a New York reversal, right? We trade lower, leave failure swings from London or Asia or previous day's high, create high resistance during the New York session or during the morning session, and then we expand higher into our draw. Get rid of these markups. Go back to the chat. Happy to hear, man. Any suggestion to watch daily profiles with examples? Honest to God, I've watched maybe 2 videos of AM trades. I've watched, just ICT stuff is where I got the profiles from. T-Trades is the one who put me onto it by telling me to focus on it and showing me really the power behind them. And all of that is self-study from there on out. Like you're just gonna wanna practice them. You're gonna want to go into your charts and mark up your charts and try and identify these profiles. And bit by bit, you'll get better at them. Protected low after change in state of delivery. Let's go like this. That's hilarious, by the way. That's hilarious. Okay. When we have the following, right? Let's say we've got sell side resting below these lows, like this. If we were to take out the stops below these lows, this down move becomes an order block. If this move becomes an order block, then we should be respecting opening price. After we close above it, the market has shifted into a buy program. So if we are in a buy program and this is an order block, then the market should not take out that order block low because that would invalidate it, right? So that means it should tap the opening price and expand higher again. Beautiful example of this was ES on that buy day. That for ES was not a buy day at all. Check this out. We go to the hourly. Let's look at ES here. Okay, hourly chart. Right there. We had an SMT down here with the sell stops, right? They were taken. They weren't taken on ES, but NASDAQ took them. So I'm putting the exact same weight on it for this asset. Then we trade and close above this down closed candle. How many people took shorts and tried to take out London lows that day? It got close, but it didn't get the job done. Because after this change in the stated delivery, if the narrative is higher prices and we are bullish, it will not come back down there and violate that. And people only have a problem with it when they're trading against it. But if you're in a trade and you see a stop hunt and you see a change in stated delivery and you put your entry on that opening price and you stop below this low, you wouldn't expect it to get ran either. You wouldn't want it to get ran because that's what's logical and that's what supports the narrative. Does that make sense? So when does the low stop being protected? The low stop's being protected once we hit our key array, let's say, right? The market is in a buy program from this point forward until what happens? Until it hits a higher time frame key POI and then the change in state of delivery occurs. So for an ES, it was here, right? Right there, we get that change in the state of delivery. This low is no longer safe. ES is now seeking sell side because it's shifted. Matter of fact, it stayed safe. No, it didn't. It got ticked out. But the market shifted from a buy program here into a sell program and now looked for these lows. Until then, this will stay supported, right? And if you just go through and keep marking up the down closed candles in the uptrend, you'd find that they stay respected on the way up. There's a nice example of this. Let's see the 15-minute, actually hourly chart, but it was Monday a couple of weeks ago. We had a buy day as well. Let's see if I can find that. Right there. Look at this. 2 to 3 a.m. Down closed candles, change in state of delivery. This is a buy day. You see how close it gets to it? We're talking maybe 2 points, maybe less, 1.5 points, but it doesn't take out this low because that would invalidate the bullish order flow. If we're in a bull market, it wouldn't break this low and trade lower. So it stops shy of it and it moves higher. Now, if you want to know when can you expect that we're likely to take out this low, if we trade and close below the mean threshold, then chances are it's not going to hold. So if we do this and we close there, it's likely not going to hold. But as long as we trade, we can trade all the way down to the bottom of the order block. If we close up here or even here, you're probably going to be fine. So it's all about closing prices, right? At some point in this 1 hour of trading at 11 a.m., this was a big black candle just pushing down into this area. And at that time, it may feel frightening, right? Because you think she's going against you and it's going to run you out. But once that candle flips and you get this upside expansion, that's showing you that you're on side and that this is the narrative at hand. Oh my God. Needing nothing attracts everything would be a good topic to close the stream later at Kiko. I'm 100% down. I'll go into the topic of it. Let me see if I didn't miss anything. Deep sauce, please, on soup. I don't have any. Actually, I do. No, I don't have any. What do you mean by confirm it with SMT? Well, SMT is a confirmation tool, right? If two correlated markets are doing the same thing, then I have no idea what's happening, right? All I know is there's an uptrend and nothing's changed yet. I'm just going to look for longs. But let's say something like this happens. and we get an SMT on the highs. That means the market made a lower high here and made a higher high here. For me, this points towards a reversal. But I don't just want to look at this naked, right? I'm looking at where does this happen. If we're on the 1 minute chart, and this here is a 1 hour PD array, let's say a 1 hour buy side imbalance, sell side imbalance, then as soon as I see us trade into it, and then I see this SMT, it confirms to me that the market is ready to go the other way. It's ready to reverse, and therefore I should look for reversals. If you start overtrading, what are the things you will do and won't do? I don't have that problem myself, but what I could advise at least is you want to be very, very specific with what you're looking for and give yourself almost less chances to trade. Not because you want to be making less progress, but because by having fixed rules and sort of a system, regardless if you miss out on some trades or not, you're disciplining yourself to look for certain signatures only and to only then engage. And that way you're removing the chance of overtrading. Like, okay, the model I'm currently trading is very specific. So overtrading isn't an option for me because it doesn't form a lot, right? I don't see that model happening a lot. So even if I wanted to overtrade, how could I overtrade if the model's not there? Like on the 5 minute chart here, the model I would look to trade didn't happen this day. Didn't happen the entire day. It didn't form once. So in that point, there's no point for me overtrading because my model isn't even there. And the way you know your model and trust your model is by having the data to back it up. You've seen the results, you've seen what can be done with it, and you've found consistency with it through back testing and maybe forward testing or paper trading and whatnot. So you can trust it and let yourself take some time, take it slow, trade slow, and let the money come in. Expansion through midpoint shows shift. Yes, sir. Big time. ICT core content month 1. Equilibrium expansion. That's the cycle, right? Market moves from a level of equilibrium into a new expansion. So if you're looking at a range defined by high to low, you're expecting the market to expand at that 0.5 level to make new highs. If it fails to expand, it's likely to curl over. Which ICT series would you recommend for learning SFT? No need for an ICT series. Just watch T-Trade's video. Exactly. It's pretty easy. Can you explain PD arrays violated, bro? Explain. Okay, this here is a bearish fair value gap or a SIBI. If I'm looking to sell in this and we close above it, that means it's been violated, which means I don't trust it anymore. It doesn't work, essentially. So a violated PD array is just a PD array that's not doing its job. It's not functioning. Could you also explain how you choose dealing range? Yes. You have high, low, something like this. When a new high is made and a new low is made, so this is the sell side liquidity here, and this is the buy side liquidity here. Oops. Right there. This is what creates my dealing range, right? This high to this swing low. So if I go and like apply this to a live chart, let's hop on the 15 minutes, see if we can find it nice and clean. Find something that looks pretty decent. So check this out. We've got buy side above here. We've got sell side below there. Swing low, swing high. That's a small little dealing range that we formed. So then you can take this dealing range, you can find your discount arrays, and then it trades off of that. You can do the same thing maybe on the higher time frame. Let's go to the daily. We're on ES as well, which is not exactly soothing. Find a decent leg. Something that looks clean. Okay, that looks decent. Check this out. Buy side above these highs. Sell side below these lows. Swing high, breaks down lower. So now I'm looking for this leg, 0.5 of it, that's a premium, breaks down lower. Now you can adjust this by doing an intermediate dealing range, which would be this. Or you take this entire leg now as it's expanded. So then that would give you this range, swing high to low, and you just keep stretching your range as you go lower. When do you use standard deviation? If there's a manipulation leg. So for instance, let's see, we had a nice one here. Swing high to low, that took out the liquidity over here and traded into a monthly fair value gap. So that's my standard deviation leg. If I project that to the upside, see right there, topped at about 2.5. And then this is sort of what you can expect to see. That's it. I'm projecting the swing high to low that took out prior liquidity, and then the move higher to expect where is it likely to retrace, where is it likely to top out. Brad was very helpful last night, but wanted your advice about getting better at executions, because I could see this forming every time, but hesitate and I miss it, then enter a horrible entry only to get stopped out. How would you correct this? Thank you, sir. My opinion on that is always going to be the same. You likely don't know your process enough, right? Because a lot of the things we feel, like FOMO and rushing in to get into a trade and this like that, it's usually because you think it's running away from you, but you don't know if it is running away from you. You're just sort of having a hunch, right? It's not the market's running away from me because I've identified exactly the signatures in price that signal to me it's going to leave. It's just running away from me because I think it's moving quickly and I'm going to miss it. So I'm going to try and force myself into a trade. Now, on this day, we didn't get a good retrace. So if your trade was here, you would never get filled. But on a lot of days, what you're going to do is you're going to chase it all the way up here, and then you're going to try and get in here, and it's going to go down for the retrace and then expand higher. What I recommend to you is you need to do a lot of back testing. You have to just take your model, go in, rinse and repeat every single day, do it quick, get a trade in, just see what happens. And then look at the data after, right? You're going to start to see, okay, it takes 1.5 hours for my trade to get through, right? So that's how long I should wait on average to hit my TP. At the same time, it takes me 42 minutes to get filled, as an example, right? So once you see that data, you start to understand the next time I'm looking to trade and it's been 5 minutes and I haven't gotten filled, I shouldn't try and chase price or get FOMO, because I know based on data for my model, it will take me on average this much time to get filled. And if you don't get filled, you just don't lose money. That's the bottom line, right? There's nothing to stress about on not getting a trade. But what happens is that if you force setups or you hesitate when your setup is there, you're missing out on the actual gains. You have to be comfortable with throwing money at the market when your setup is there, regardless what the outcome is going to be, right? Just execute relentlessly. Just keep placing the trade and let it go through. For instance, this week, the model I've been trading lately, I took it three or 2 times this week. Every single time it failed. So that was 3 days of the week where I was red. It just failed every single time. That's going to happen, right? But the point is that I'm not going to try and stop myself by hesitating or letting my emotions take control. I'm just going to keep executing it because I understand the statistics will play in my favor. The one trade I took this day and the second one I took after not only fixed the damage from this week, but also got me green on the week. So within 1 day trading my model, I fixed what was 3 days of damage using my initial model. So it's not the model that's failing, it's more so your human error. You have to get used to just monkey see, monkey do. You have your rules. If they're met and you see your model and your bias is long and the model presents itself long, just take it regardless and just let it stop out a couple of times, because that's the cost of doing business, essentially. Got you, brother. Can you explain the long-term dealing range again, please? So, like, if you're on the, let's see this. Like on the hourly, for instance. On the hourly, this would be our dealing range, because it's this swing high to this that took out this high and took out these lows. That defines a dealing range. But now if I go into the 5-minute, I can find that within my dealing range on the higher time frame, which I can keep around for some time, there's lower time frame dealing ranges that form. For instance, this one, swing low to swing high, took out this liquidity. So then you can look to frame longs here, and so on and so forth. So that you're just basically taking the steps forward with price, but you can keep the higher time frame legs on, as those may carry more significance for further time. Let's see. After we take out the highs above here, this would create a new dealing range as well, essentially. What's the question? Hello, how to find out market structure shift? Very simple. The swing low that takes out liquidity. So if you have this right here, this swing low took out liquidity, right? Then you want to look, where's the swing high that formed before it, which is this one right here. That's your market structure shift. So you look for the market, get this thing. You look for the market to take out a key level and then break above the swing high that formed that run lower into this level. And that's your market structure shift. I don't even think I don't. Let's do MSS like so. We can see the same thing up here. We never took out, we traded into a key level here, but there's no like clear swing. Right here, I take this because we get this swing low, trades into this old imbalance. And this swing low also traded into an imbalance down here. And then we break down below this. So I'd note this to be a shift in market structure. Because we've put in a failure swing right here, we're respecting bearish arrays. This low rebalanced an old buy side imbalance, and then we broke through it with displacement, right? There's strong candle closure through it. Retraces, breaks down lower. This low can be used to sell as its resistance, and then it breaks down even further. Let's delete some of this. Can you do a top down of Tuesday's AM of this week? Sure. Based on your experience, what is a realistic time frame for becoming profitable? I'll say 2 to 3 years sounds good. I think 2 to 3 years sounds like a good time. For some, it might take more. For some, it might take less, because we've got different learning curves. We've got different life circumstances and different issues, I suppose. But I think 2 to 3 years, if you really sit down and put the work in, should be more than enough. How to use internal range to external range. I saw some folks get payout with 7 months. Yeah, I got my first payout with, what was it? Okay, I got my first payout after 7 months. Wait, yeah, 7 months. But then from that payout forward, it wasn't like, oops, time to make money, you know? That's not what happened. You get a payout, and then ends up you don't get a payout, and then you realize you got lucky and you're maybe not as good as you think. So it's really just different for every single person. Sometimes you make some money, sometimes you lose money. Consistency nonstop, it'll take some time. I don't speak on how long I've been trading. It's something I don't talk about. Do you use the wick or bodies for your CSD and projection? I use the wick for my standard deviation projections. But for change of state delivery, I always use the body. I use the opening price. What's the use case for advanced market structure? Advanced market structure will help you know when you're trading, if you're onside or if you're offside. So, like for instance, this here, I saw these equal lows and I was considering a potential run into all-time highs. I ended up souping this, so I bought these lows. Must have looked something like this here. And then I put my stop below there, and I was looking to take out this high and the run into all-time highs being my draw. But then what happened is that we formed a low, and then we formed a lower low here, and this low should have been protected because we had SMT with ES, which means that on ES, this low becomes an intermediate term low because there's a swing low, a lower low, and then a higher low next to it. But then after we broke this low again, that shows me that in fact I'm offside and the market is breaking to the downside. So you can use that to identify if you're onside or offside. I also had annotated, if I am onside, it should expand above this high because this is a short-term high, so it should rip through it with some speed. But because it didn't do that, it's showing me that I'm actively on the wrong side of the marketplace and I should flip directions or stay out altogether. Do I speak German? Yeah. What's your approach with prop firms to getting funded? Aggressive. I trade them aggressively. Try and get it done in a few trades. Don't waste a lot of time on prop firms because the challenge costs like $20. And you don't want to, your goal is to try and get yourself in a environment where you're trading with emotions and you're trying to make money, but you don't want to be sitting around in prop evaluation for 7 months paying a monthly fee when you can blow 7 accounts in that time. You know what I mean? My cat is hungry. I wish he was, but he just talks a lot. That's just his thing. He's bugged out because he needs attention. But now he's on the mouse pad, so I think he'll be fine. Let's see. 1 second. Yeah, he seems okay. I risk 10% of my drawdown per trade, sometimes more. So if I have 2,000 drawdown, I'll risk 200 of it. How to trade order block. Wait for a run above highs, sell the opening price. Literally, that's it. That's it. That's literally order blocks. Where do you put your stop? Make it mechanical. Put it on the body high. Look for 2R. That's order block trading incorporated. Done deal. 200 is high risk for you? No, not at all. I wouldn't call it high risk, but 10% of drawdown is the risk that I'm happy to endure because that allows me 10 losses before I blow the account. Maybe 8 or 7, give or take, because of Apex's trailing drawdown. What do you need with 8:30, 9:30, and 10 a.m.? Are you asking about the time openings? I wish I could show you, I could show you specific examples, but it'll take a lot of time, and a lot of it is going to be self-study. So what I'd advise you is you go into your trading view, you turn on this indicator, ICT kill zones and pivots. It'll draw out 8:30, midnight. You can add to it. You can go here and you can add 9:30 and 10 a.m. to it, which I have there. And then you just go into your charts and you watch. You just watch those. You just keep going over old days of price action and you look at what happens at those levels. That's literally it. You're gonna have to do self-study for that. You'll notice patterns repeating and trends occur, and then you'll start to get the gist of it, and you'll start to be like, that's how it works. I'm gonna stop in 30 minutes or so, maybe a bit longer, Denny. 1 second, I just have to make sure I'm not missing any of these questions. You match your standard deviation projection. Okay, a 1 minute projection, maybe projecting, the next. I wouldn't peg it to time frame alignments because I don't know them by heart, but I do know that, let's say a 15-minute projection will show you how far the daily candle goes. And then a 1 hour projection would show you how far the weekly candle goes. And then a 4 hour projection would show you how far the monthly candle goes. So you're using that time frame alignment to predict the next, so to say, higher time frame candles expansion. Would you say that trading is still a safe skill to learn for the future? Yes. Yes. Example of a trade based on advanced market structure. Kiko, please. Yes. 1 second. Let's delete this. Let me see if I can find. Is there any decent sell programs we had lately? We had SMT here. No. Oh, we did. Yeah, but it's not that nice. Okay, I'll try and explain it like this. I'll try and sketch it up myself. So let's say you have this, and this and this. So let's say this is your swing high. Now we can label this. Let's say this traded into a higher time frame PY. So I'm labeling this as a long-term high, short-term high, short-term high. Let's make this a short-term low. This here is a short-term low, intermediate term low. And let's say we do this here, like this, makes this a short-term low. So now what are we looking at here? We've got a long-term high because we traded into a key point of interest. Then you've got these highs next to it. We've got a short-term low, intermediate term low, and another short-term low because this low is lower than these two to the side of it. Now let's say short-term high, there's a high here. Let's say this runs out this high. So that makes an SMT right here. Now, as soon as we run out this high and we make an SMT, we're expecting this here to become an intermediate term high. So once that next high is a lower high and we break below this low, that's a high risk, low confirmation short entry. But then if we break below this intermediate term low, this is a high probability entry because we're breaking the advanced market structure to the downside. So you want to be using it in that sense. A lot of it is really just waiting for highs to form and for SMTs to form on those highs. Because if an SMT forms here like this, then that must mean that the other asset did this. And if it did this, then we've got high, lower high over here and lower high over there, which creates an intermediate term high. So this should stay protected. I hope that makes sense. Can you show us an example of rejection block, please? Yes. Let's remove drawings. Let's see. We can go to daily. This is a rejection block. Like that. The wick of this candle should act as resistance. And so trading above the, I'm using this body because it's the highest up close here. Trading above the body, rejecting it, and then breaking down lower. That's a rejection block. Offset distribution is order pairing. Exactly. Precisely. That's what it is. Just turned 19. Would you say that's a late start? No. Hello, Brad. I do not use COT now. I tried using COT before, and I did a whole weekly outlook, and it took me like 30 minutes to make it, and I put in nice charts and showed explanations. And then we had Monday low of the week. Monday was a 300-point day, and it just ripped higher all week. And that's when I officially quit on COT data, which told me we were definitely going lower. No, it's not available on FX Replay, but you can use on FX Replay. There's like daily opening prices or something is what it's called. I use that one, and I just put midnight open on it, and I don't even know if I have two time levels plotted, but midnight open is definitely on it. Jeremia, fick dich. Because I was trading 5,650 for my first. Yeah, it depends what your drawdown size is, right? If your drawdown size is larger, you can risk more, but I think 10% of drawdown size is a great amount to risk. How to use timing in your trading, like how to know this information. Yeah, you have to wait for SMT. What Stana said. SMT is what confirms you're on side. There's some time elements to it, like when is high probability SMT likely to occur. If you're studying daily profiles and you start to understand when markets tend to make the low of day and high of day based on the daily profile, that's when you know you can really trust an SMT, right? If we form an SMT during Asia, I'm not going to bet that that's going to be high of day. But if we get a proper stop hunt in London and then we get an SMT, chances are it's high of day because we then look for the opposing range. Can you describe accumulation with a distribution and adjustment? What does that mean? Like you get distribution down and then you get like a quick pause. Is that what you're saying? Oops, let's make you green. Safe stop loss placement, high/low or body. I take high/low. Just use the high or low. Don't make it more complicated for yourself. There's a lot of you'll notice that I think when you get more experienced, there's a lot of sloppiness that you see in price during certain weeks. Like next week, non-farm payroll, we'll see a lot of that. You're going to see a lot of market trades below bodies that shouldn't be traded below. It won't take the low out, but it'll take trade below the body, or it'll fall short of targets. And for that reason, stick with the mechanical approach of keeping your stop at the highs and lows where it's likely to protect. Can you show us how you overlay trading view to find SMTs? Okay, usually I do this, right? I've got this here open on another screen, so I see them there. But if you want to do it on your one screen without premium, I can show you that. You go here, and then when you're looking at your chart, you see this plus symbol next to NQ1. Press that, ES1, new pane, and that'll put ES right below you. And if you like, what's cool about this is if I put like a line tool, it transposes to the downside. So like if I'm on a lower time frame and I'm looking for an SMT, I can like actively scroll. Yeah, like let's pull you over here. So like let's stretch this up. Zoom in a bit. So like here you can actively scroll with this and you can sort of see, like here I can see, we made a higher low here. And then I can draw that out. And it'll show you where that lower low was made, which was right on this candle. So just use that +1 symbol. Or if you have premium, you can obviously just open a second chart like so and look at it here, or open multiple charts. How would you use daily profile if you were trading London? Okay, if I was trading London for daily profiles, I'd always have to wait for late London to see if we get an hourly CSD, and then I'd buy that. Or maybe a 15-minute if you want to be aggressive. But I am not a London trader. I do not trade London, and I don't have a lot of experience with that session. The only way I could navigate it is through profiles, but I don't trade it, so I'm not going to try and give advice on it. That would not be beneficial for anybody. I do not swing trade, no. I would like to someday, but as of now, I don't. I don't think Apex would let me hold through the night. 19 is not late to start trading. That's actually very, very early. I think there's a big money culture that exists right now that has people thinking they're running out of a lot of time and they need to get things done now. I think you should be hungry to some extent, but like if you started at 27, you're still okay. Like you're still in pretty good timing, you know? I think 30 is when you should start, you know, looking to get serious. You should by then know what you're good at in life, know what you can do. Have a maybe started a career in something. The cat is going for my beef. And then you can like do that stuff. But 19, man, at 19, most people are absolutely jerking off in the club or something. So it's not like you're late to the party. Yeah, it's completely fine. You catch low of the day / high of the day if we're trending right, continuation. What does that mean? Are you asking me if I would? What does that mean? Would you mind going through how to manage open trades, when to put your stop break even, since if it broke below it would be invalidated? Also, I don't know when to close out a loser early. It's very difficult. I wish I could make it easy, but because a lot of it is okay. There's one thing that you cannot learn in books, which you will literally like. Okay, sometimes people ask me, "How do you know an SMT will hold?" And the dumbest answer I have to give is experience. And sometimes, like you just know based on things you've seen in the past when something is likely to hold or not, based on how price is moving. If that makes sense. So, like, I could show you perfect stop management right here with every single one of these opposing candles that forms where you could put your stop on the high of them. But a lot of it also comes down to understanding how the market moves, how it's likely to move, and seeing the price action live. But if you wanted to play it safe in an uptrend like this, just always trail your stop if you want to trail it to the candle body low of order blocks, like these opposing candles. That should stay protected. That's about as easy an approach as there is. then you can, when you have a bit more experience, you can get much more aggressive with it. Like I can openly trail stop losses into gaps, or I can trail them above wicks. I can put them inside PD arrays, knowing that it won't get traded to. But that's just something that you're gonna have to learn along the road. And honestly, a lot of good trades that I've been in when I started out got cut short due to aggressive trailing like that. So I wouldn't even recommend it. It's just a skill you'll have to acquire. When can we anticipate London high of the day / low of the day? If from 2 p.m. Eastern time until London, the market stays in a small range. I'm not saying tiny, but if the market maintains a small range where it allows for liquidity to be built in, you can expect London to make low of the day and a classic buy day to like here wasn't great. 2 p.m. had some movement, but if you, let's say, if you get this sort of movement prior to London, you can expect a Judas and expansion higher. All of this within the understanding of the higher time frame and your bias and all of the above, essentially, right? When you're not likely to see this is if we get an Asian range that trends or is just extremely overextended, doing a lot of movement. That's when you're not likely to see a London higher low of the day because it's pointing more towards a range profile where London is more likely to consolidate and it's not given enough liquidity to attack. What do you think about T's trading model for Sky? People pull money from poor people and put it in their pocket, right? When So 1,000 new billionaires added to the world in the year of COVID. How does that happen? The money that they've been putting into the market through retirement funds or people's investments, the average people, it just fuels into the market, and then the rich people take their cut, and then that thing goes the other way. And when it goes the other way, we're not buying, right? If you're struggling to get over your rounds, you're not buying the dip on the stock market. But if you're rich and you're sitting on, let's say you're sitting on $2 million cash and you buy the dip on NASDAQ during COVID, you're having yourself a good time by about 2021. You see what I'm saying? So that process of taking money from the poor, putting in the pocket of the rich, it's never going to go away. It wouldn't go away. And there's, even if AIs does it, all that's going to do is it's going to increase the amount of participants in the market, which will add to volume, which will add to volatility, which is exactly what we want. Your ability to trade the market depends on you. It has nothing to do with who's coming in and whether something's going on or not. So the market's here to stay. If the market, I always say this and I really do mean it, if the market ever stops, if there's ever a point in time where you cannot trade, it's because we're in a nuclear warfare or you're dead. That's the bottom line, because this thing is here to stay. It's not going anywhere. Yeah, don't trail your stop much and don't put it at break even. Break even is where a lot of traders' dreams go to die, because break even is essentially you saying where I entered my trade is where the trade idea is wrong. So I entered where the trade idea is wrong, because if it came back to my entry, my trade would be invalidated. So I wouldn't do that at all. I wouldn't trail a break even. And Apex luckily teaches you that, because Apex with their trailing drawdown, you end up losing money going break even. So you're much more focused on taking profits. But they do also screw you with that, so not exactly the best. Silver Bullet. Silver Bullet is a time-based trading model where you are looking for a fair value gap to form between 10 to 11. You buy that fair value gap, you look for at least, I think he says 30 handles, and that's it. One directional move, a trending model. You're looking for Fair value gap to form, 10 to 11, and that's it. Let me see if I can find it. Let's find your silver bullet. The fair value gap for the silver bullet can form outside of the time window as well, but like let's say we're taking this here. You can use confluences from other models and from the 2022 mentorship, but like this would be maybe your ICT silver bullet. You're looking for this. Fair value gap after trading into key level, looking for 30 handles at most. Let's call it 50 because 2 are, and that's it. That's the model. It's simple, it's effective, but you got to match it with like bigger picture sort of things. Get! Is the VPN tweaking? Yeah, it'll be downloaded and it'll the stream will be uploaded to YouTube. Just quickly, someone was asking something. Daily profile, 15 minutes CST, but you can use 30 as well. I generally use 15. Can you do your best to explain CSD via best time for mechanical entry and personal experimental experience? Yeah, I'll just 100% I'd go with a 5-minute. This is how you make it mechanical. You wait for a pool of liquidity to form prior to 9:30. Then you wait for a stop hunt into that pool of liquidity and you take this. Right? At 9:30 you look for a stop hunt. You take the opening price, you put your stop below this low and you look for 2R. That's mechanical, that's easy, and it's effective, and it works. And I've backtested it, so it should yield proper results. You do all of this, obviously, with respect to your daily bias and understanding of the market profiles, but I can show you how that model worked here. You always use the 5-minute time frame. Keep it simple. Let's see right here. We've got a pool of liquidity, these equal lows right there. Stop hunt into equal lows, closure above. You're buying the opening price, stop below the low, look for 2R, not more. There's 2R, be happy, take that. Done deal. This is a model that'll hit often. And at 9:30, extra effective. Easy, brother.
I would take the one to the right, one that traded just like a bit more like institutional order flow entry drill. That's if we take a bit more confluence.
Yeah, okay. On a general, if you want to look for the continuation setup, this one is probably nicer. Wait, this one right here, or this one. But as I said, you use confluences from the 2022 mentorship and from other mentorships for the silver bullet. You can't just go out there and pattern trade it. But yeah, actually, now that you say it, Danny, this one is. This is the one I took as well, but I didn't take it because there was a fair value gap there. I took it because of the breaker. This is also a nice setup. Had to cook, bro. Let me see if I missed anything. Yeah, the VPN is probably dying on me. My laptop is steaming as well. Okay, not missing anything. Appreciate it, man. We got more to come as well. I think if there's no more questions left, we can go into the where was it? Needing nothing attracts everything. And how come this guy thinks I'm German, by the way? That's something I want to understand. You know, you said you weren't consistently profitable. Oh, okay. This might sound strange. It might sound very strange, or even like an excuse. I don't think that I'm okay. In my head, I'm already profitable. Not saying that I'm not okay. It's like a weird thing, but when I started trading, I struggled at first. Then I made some money. Then I lost some accounts. Then I did well. Right now, I've got the most funding I've ever had, and I've literally not like all my emotional issues and stuff. That's all gone. The psychology is gone. My trading is great. I've literally not even had enough time yet to trade the market, if that makes sense. Like I've been back from vacation. During vacation, I didn't trade at all or even much. Just before vacation, I was trading another account of mine, but at like as of this time, it's only a matter of weeks until I take enough trades until I can show, okay, gotten more consistent since then, if that makes sense. Like, it's not that I need to change anything right now. I've already done all my studying. I've already reached a stage. I just need to actually actively start trading more so that the statistics play out, right? If I show you my current backtest, that's a problem I still have. I've backtested 101 trading days, I think, on one model, and I only took 13 or 16 trades or something like that because of how picky I'm being. And I'll just skip Mondays right away. I'll skip days that look very choppy. So it ends up racking up large amount of time. So if we're talking, if in the next 100 days, I trade 13 days, maybe after that I can show, okay, here's the receipts, this is this and that. But it's just it'll literally just take time at this point. Time is the only factor standing in my way. But I'm not in a rush about it at all. Like, an important thing is that you have to reach a level of comfort, and I guess it's different for different people, but I've reached that level of comfort fully, right? I've got no rush in this. I'm not trying to put on a show. I'm not trying to accelerate the process. I've got multiple accounts that I'm trading right now. I've got different balances across the accounts, working towards the payout requirements, but I'm not trying to force it and screw up the progress. So if I don't get a trade next week and I don't get a trade the week after, it just means that I'm going to have to wait. That's just how it's going to have to be. But then maybe that week after that, 3 weeks from today, then I find 2 trades and then it adds up. And, you just got to really take it patient, because there's no rush in this. If you're rushing this, you're slowing down your process, because if you're rushing something, it means that you have no idea if you can make it or not. You're trying to get it done quick to prove, let me get it done while I can, But if you're confident in your abilities, why would you try and rush the process? If you've got a lot of funding, you can make decent money. Yeah, exactly. That's the point, right? When I started out, the first account I ever got was a 25K, and I felt so much pressure to put on a lot of size and make a lot of money. But with the current capital I have, I couldn't give less a shit. If I get one decent trade a month, that's already very, very good. So it's not like I'm trying to shift the planet. Things we were talking about yesterday, -1. What is that? What am I looking at? The trap traders below. Support. Is that from a measuring gap? Or no, it's not a measuring gap, is it? It is. Bueno. Do you feel like a 50K is easier to pass than 100K? No, actually, I don't think so. I think that any account is easy to pass depending on how you manage your risk. The higher it goes, they do get more tricky with the drawdown, but 50K has the best drawdown ratio, which technically makes it easier to pass. But you should be able to pass pretty much any account in 2 to 3 trades, maybe 4, if you win them all, because that's kind of that's how many trades you want to take to pass an account. You don't want to sit in that evaluation phase for your whole life. You just want to get it out and over with. Hello, so I am new. Where shall I start to watch ICT? I know basic SMC. Please reply. Go to ICT's YouTube channel, The Inner Circle Trader, and start with core content. You can do very well for yourself right there. All right, boys, we got 5 minutes until I head out of here. Any closing questions? Throw them. And then I'll probably call it a day. And yes, it will be recorded. Let's just make sure that it's running. Yes. It'll be recorded. I'll upload it, and then I'll provide the link for it in the Discord. So you guys should have access to it. Anything meaning of your avatar? Okay, I'll tell you the truth. If you use an AI image generator and you type in "draw me the ghost in the machine," this is what would come out, or something similar to this. And so that's what I did when I started trading, and then I just liked the profile picture so much that I've been using it since. How often using 4-hour? I don't use it that much. The only reason I'm using it this week is because we're in a 4-hour buy program. It's much clearer on the 4-hour. And I'm using 4 hours any higher time frame. It's just to identify the trend. Because we traded into a weekly imbalance, you want to look at the 4-hour for your market maker model. Original consolidation, manipulation, first stage, second stage, smart man reversal, first stage, second stage. Should have left this second stage with expansion, but she cucked us. It is what it is. What did you do after blowing an account? When I started, I used to feel like shit. I used to feel really shit. I'm talking, my day was ruined. I wouldn't be in a good mood. I'd be stressed from trading, and I'd struggle to get back into the market because the next week I'm afraid of going in and making mistakes again and feeling a bad way. Nowadays, I don't give a fuck. It doesn't scratch me one bit. Nothing about the charts ever affects me ever. If there's one thing I still sort of get worked up about in the slightest bit, let's say, is if let's say the market is being lethargic in a manner where I didn't expect it to. Like if I had high expectations of the market for any given day and it didn't deliver, then I'm sort of annoyed. Whether I took a trade or not, I'll technically be annoyed because I'm thinking that's not familiar of the market to do that. But other than that, I don't give a shit about anything anymore. I trade, right now I have 7 accounts that I'm copying and another 3 on backup actually. And when I place a trade on them, I place it. If I get stopped out in the next minute, I don't even look back again, right? I just move on with my life. I close the laptop, I go have a good time, maybe watch something, maybe chill with the cat. When you like get to that level of comfort, trading gets much easier because you're not valuing your own self-worth on your results. You're more so letting the statistics play out and understanding that you're going to lose sometimes. It's going to happen. Especially you're going to lose when you think everything is pointing towards this trade is going to work out. And once you start getting rid of those feelings, you start feeling better and you trade better, because what happens is that if you just trade your model over and over and over without emotions, you're going to make money regardless. It's impossible not to. But if you lose your first trade and then you try to use your brain, which it's not very effective in trading, and you try to react emotionally and do something different in your next trade or try to minimize your loss or prevent the chance of losing, you actually end up inviting losing into your trading. And then that kind of gets you into a devil cycle. When looking at how Asia London opens the day, how do you work the movement to fit into your narrative? You always use you refer to the daily profiles. Let me see if I can pull this up again. I'm looking to see, yeah, like so this. If Asia makes a high and London makes a lower high, I'm always looking to see, do we get this pattern during New York? Because that means this is the buy side. If Asia makes a low and London takes out Asia low and then Asia highs, then there's a CSD. I'm looking to trade continuation buys higher. So I'm always referring to the daily profiles, and really the daily profile is just the open high low close formation, right? But in order for that open high low close to form, you need high resistance on one side of the marketplace. So when we open low like this and we take out these stops and we trade higher, this makes this low high resistance. So London low is protected, and I'm expecting continuation during New York. That's how I usually key off of these. You have to take a lot of this stuff and you have to study it in your charts. You have to literally go through your charts, annotate them, and see your stuff. Where can I get notes for ICT mentorship? You write them yourself, actually. You have to go to the store and you buy a notebook, and then you get a pencil and you write down in your notebook, the notes. That's how you study. Do you have a plan for live trading ready for buy the subscription and learning? What do you mean, like trading a live account? Signals. Never. I think bias should be more than enough. Honestly, not to stroke it a bit, but pretty much every day was spot on this week from the expected outlook. I think that should be enough to get an edge into your trading. You wouldn't need me to tell you a specific level, because chances are you'll just actually, you take my signals, you'll probably blow your account. No live stream and people can get in and talk about what you think. Well, this is what we're doing right now. Or what do you mean? Oh, you mean trading live? No, I'm not going to do that. Not because I'd feel nervous about it. Like, I could easily trade in front of a crowd, and I wouldn't mind losing a trade or winning a trade, but I don't want to enforce that sort of thing in here, right? Where people come in and they watch how someone trades and then they copy the trades, and it's just a lot of issues I don't want to have. A lot of what I'm giving you guys is already valuable enough. You can make a lot of it. The live trading route is not going to happen. Can you give me summary of what? TGIF. TGIF is when we have the market open on Monday and one-sided expansion into weekly close. And usually the market will have to trade into a monthly or weekly key PD array. When this occurs, you can take this tool and expect the market to retrace on Friday 20 to 30% of the weekly range. To show you something cool, which is that this model is fractal. I spoke about it earlier in the week as well. If you take the monthly range that we had this month, we traded all the way up into here, but the market closed this week within 20 to 30% of the weekly range. So that's your TGIF essentially. See that? Made highs and then came in here. Okay, I think that settles it. I don't know what summary this guy's talking about. I don't think I can. Summary about what? If I can, I'll do it and then I'll call it a day. AC, you showed up for the perfect timing. I'm fucking leaving. I'm getting the fuck out of here. I'm about to take the Beamer, baby. I'm about to go to the mall. I'm gonna cook. Appreciate it, guys. Thank you guys for showing up. And hopefully next week, same thing. Probably around same time. Looking to do these around the same time. Keep a consistent schedule. Would it make sense to sweep 90625 before going higher? 90625. Yes. We probably will gap down even. Chances are we just gap down next week. I could see this low getting attacked in this one as well. But yeah, ES just needs ES needs these lows and then we're good to go higher. So I think we gap down, we trade into these lows quickly, and then we can see a run higher. This week was disgusting. Holy shit. No problem, guys. Easy. You traded Bitcoin futures, huh? Can you do it like 30 minutes after market close every day and we don't need weekend? I can't do it every day. Every day would be too time demanding for me. I could consider doing it Friday on close, especially because Friday on close we can see the weekly profile, how it's developed and how the week has ended. But Monday, Tuesday, Wednesday, Thursday, Friday, every single day doing this, it's not going to work for me. Sorry. Needing nothing attracts everything. So on the topic of that, I think I sort of touched onto that while we were in it. If you're trading, when we come into trading, you come into trading with zero life experience that prepares you for trading, because trading is nothing that you can prepare for. You show up and it's there and you have to learn from scratch. And what we're taught from the beginning of our lives is essentially you make mistakes means bad. It's not good. If you make a mistake and you're wrong, that's a bad thing. So never make mistakes and never lose. You always have to be first place. You always have to get the best grades. You always have to do good. So you're coming into trading with the same mindset, which is I must do good. I must make money because money validates that I did well. And then what you do is you not only connect your trading to your psychology effectively, but you're also chaining essentially what you get out of trading to your self-worth. So you start to believe I'm only as valuable as my results from trading are, because unless I am doing well in this, I'm wrong. It means that I'm doing something wrong. It's bad. And needing nothing it's a difficult thing to learn. But with everything you want in life, if you think about it this way, assume that a supercar was alive and breathing and had a personality. This guy wants my IG. Assume a supercar was alive and breathing. If you wanted to drive a supercar, okay, and the supercar saw you approach it, and you tell the supercar, oh my God, I want to drive you so bad, and oh, I've been dreaming my whole life of this, and I can't believe that you would allow me to drive you, and I'm not even worth it, and I'm so... That's just gonna turn that object away from you because you're undeserving, right? You don't deserve to enjoy that object, therefore life will not invite it into your life. You have to mentally become a person who deserves things in order to have those things, right? There's a lot of people, you definitely know them in your own life. All they do is try and make money, and they all have no money. What do? They work very hard and they save a lot of money. No one saves themselves rich. Bottom line, right? It's just not happening. Whereas people who make real money, they open themselves up to the possibility of earning money, but they don't need it. They don't desire it to the point where they're desperate for it. Because if you work from a place of desperation, you'll never get the things you want. Because the universe recognizes this person is desperate. And being desperate means you don't deserve it. If you deserve something, you'll get it. And that's the importance of needing nothing to attract something. Exactly, like chasing a girl. That was it was the exact example that I provided, right? If you chase a girl and she smells that stink on you of desperate to get laid, she's gonna avoid you at all costs. But a girl that you can look in the eyes and then look away and not even give a shit if she, falls along with you, likes you, doesn't like you, is with you, any of that stuff, that's the girl that's gonna go crazy for you because you're independent. You don't need it. Do I drive supercar? How many horsepower is needed for it to be a supercar? I'm about to Google this shit. Let's see. Maybe I'm an official supercar driver. No, I don't drive a supercar. I don't think that I drive a supercar. What whip you got? I'm not gonna speak on my whips. I'm not talking about girls, bro. It's just yapping. And that's my IG. Yeah, it's this one. This one here. Red car theory. All right, guys. I think that wraps it up. Are these sessions done often? This is the first one in a long time. I'm looking to do them every weekend now. And if you guys check at Brad, we will be doing some together as well as time goes forward. So we're definitely working towards doing more stuff. I do have Puss to attend to, but it's the cat. it's not the Russian baddies, bro. It's just the cat. All right, easy, guys. Then I'll see you all around next week, Monday.